Welcome back. As promised, let's get that conversation going with Brigade Enterprises. Pre-sales for the company zoomed 46% sequentially, came in close to 2,150 crore rupees. Volumes jumped by about 58% as well. Realizations, however, now that was the only sort of, you could say, maybe a bit of a dampener in the numbers because they were down about 8%. Pavitra Shankar, MD of Brigade Enterprises, is with us. Pavitra, morning. Great to have you on the show as always. So looking very, very strong to round off the year. Just tell us a little more about the quarterly trends and also this dip in pricing. How should we read into it? I mean, is this some sort of a top or what sort of led to it?
I'll address that first very quickly. So the realization that we shared for the quarter is reflecting the product that we sold this quarter. This quarter, we launched a plotted project in Bangalore, pretty much sold out the entire phase in the same quarter itself. So that is why you see a slight dip in the realization only for this quarter. But if I look at it quarter on quarter, in terms of the previous year, Q4 FY23 to Q4 FY24, the overall realization has grown more than 30%, 30%. And in the annual year realization, it's a growth of 23%. So it was really just a quarter, effect because of the product that actually got launched and sold in Q4.
Okay. Fair enough. So it's more of a product mix issue. Talk about the Q4 pre-sales. How much of it was from new launches and how much from existing ones? And just give us a sense of the inventory levels as well now.
Yeah, so our Q4, similar to FY23 and FY24 as well, a lot of our launches got sort of back-ended into the last couple of quarters and specifically Q4. So overall for the year and as well as for the quarter, about 50% of our numbers came from new launches. And I think that's just something we've been seeing across our portfolio and maybe across industry as well. A lot of the launches tend to come towards the second half of the year. But overall, we're seeing a really strong demand from customers. We see that continuing. We do have a very strong pipeline for the coming year as well. We have some launches coming up in Q1 itself that RERAs come in, and we're working on that right now. So we are seeing very strong demand from customers, even in terms of acceptance of the pricing of the product, not just in terms of projects that have already been launched. We're able to take up pricing there. But in terms of the product that also Brigade is going to launch over the coming year, there is some much higher end product, and therefore we intend to see the increase in average price realization as well for the year.
Okay, so since you were mentioning yearly trends, let me just sort of get there. You ended the previous fiscal at a sales volume of about 7.3 million square feet. Sales value was up 49%, and your realizations anyway improved even in FY24. There's a big jump in realizations, and now you're saying that more premium launches perhaps will improve that. So some numbers, maybe some guidance on any of these counts, sales value, realizations, and overall volumes that you're hoping to do this year?
So I'll just give you an indication of maybe the new launches that we're coming up with. The average price realization for those on average as a total product should be around 10,000 rupees a square foot on average. Currently, we're showing around 8,200 for the portfolio. So that's where we see the pricing levels, they should increase. But naturally, the numbers that come in every quarter will depend on the inventory that has moved in that quarter. But when we're looking out in terms of the new projects that are launching, we're seeing at an average of 10,000 rupees a square foot. This is driven by the upcoming launches that we have in Bangalore, Chennai, and Hyderabad, where we have 3 marquee projects coming up, where each of them will be launched at 10,000 rupees plus, and in Chennai, possibly 20,000 rupees or more.
Okay. So in terms of expansion plans, what are we looking at over the next, say, 1 to 2 years? What are the various partnerships that you have perhaps signed or are all set to sign? And where do you see the scope geographically as well?
So, we've always been communicating our focus on the South Indian markets. We're going to continue doing that. A lot of our new acquisitions in land bank are in Bangalore, Chennai, Hyderabad, a little bit in Mysore. We are going to reiterate our focus on these markets. We can get into them not just from residential, but also office, retail, and hospitality as well. So we like these 3 markets because they're very strong from an economic perspective as well. We know there's a lot of chatter about other markets, but this is our strategy and what we'll be focusing on. on. In terms of partnerships, we're looking at both JD, so joint development, as well as outright purchases for our land banking strategy. Approximately, give or take, we're around 50-50 between both of them. Currently, in terms of other equity level partnerships, we have one partnership with GIC, but looking out, we are fully and well capitalized to continue doing things on our own, but always open in case terms work out with any private equity or any other partners in case we're looking for growth on that front.
Okay, and in the retail portfolio, I want to understand, in the office rentals rather, what is the kind of exit rental that you did in FY24 and what is the scope of growth in FY25?
So for our leased portfolio, which includes office retail and office and retail, the revenues that we did was around 940 crores. And we expect to see that maybe as on an exit rental basis of around 1,050 crores, but that would require lease up of some additional space and some of that rental to come into the cash flow stream as well. So we're looking at something like an FY26 exit rental of and stabilized rental of around 1,050 crores.
Pavitra, just to go back to the, the housing segment, I believe you had put out a guidance of doing 10 million square feet by FY27. But looking at the launches, the whole pipeline and the buoyancy in the market, could you achieve that earlier? What's the expectation for FY25?
So we're working towards that. Look, it's heavily dependent on launches coming into the pipeline. If that happens, I think current market conditions definitely support, getting to that 10 million number sooner than we had originally indicated. It is dependent on when we get these launches coming in. But once that does happen, we are quite confident that we'll be able to move the inventory, but also at a pricing that makes sense for us so that we're not simply, selling to get to some kind of number, but it makes sense from a project profitability standpoint as well. So hopefully sooner than FY27, but a lot of things need to fall into place for that. But we do have the projects and the land bank for us to get there.
Okay, and just on pricing, because you mentioned that some of the new launches that you're doing are over 10,000 rupees a square foot. So blended level, again for the year as a whole, last year you ended close to 8,000, just under 8,000. So overall blended pricing, what should we expect? 9,000 for this year? I mean, everything put together?
Yeah, I think it will heavily depend on how much inventory is being moved from the high price launches. So again, I think we will be aiming north of 9,000, but we'll have to see how that works out in terms of when the launches come in and which quarter they start hitting. But even in Bangalore, where predominantly the market was maybe, like a 6,000 to 8,000 rupees square foot kind of market, it has dramatically increased. And maybe across all our projects, we're able to launch at least 2,000 rupees more than that. So I think overall, we can push for a quarter-on-quarter above 9,000, but it will heavily depend on that inventory mix that gets transacted in each quarter.
Okay, we'll let you go on that note. Thanks a lot for joining in. Appreciate your time here. Well, with